All right, I don't know if I'm more excited about the fact that Bitcoin is at 24,000 or whether I'm more excited about the fact that we, for the first time in 6 weeks, might actually close over that 200-week moving average. So we almost closed over there last week. I said that I think we're going to close over it next week. Here we are. Let's just hope we can hold above 22,000 until Sunday, and then we've done that. At the same time, when we look at all the other charts, the NASDAQ is not stopping. So I was looking at the NASDAQ. Let me just find the NASDAQ chart. I had it, yeah. There we go. So that's the NASDAQ chart, up another 1.17%, which means that there could be a risk-on rally. And if there is a risk-on rally, it could actually last until September. That's what I think. So today we're going to talk about whether there is a risk-on rally or whether this is just a short-term thing and whether we're out of the woods and whether it's safe to start investing in crypto and risk assets. So that's going to be a big one. And remember, today's Friday. So on Fridays, what do? We banter. I've got two guests, and hopefully we'll have a third guest by the time we're ready to go. So let's do this. I don't know if I'm more excited watching Fred's face in the back here, or whether I'm more excited watching the guests jam to this. But I mean, either way, it's exciting. Either way, it's super exciting. Alrighty, welcome back, guys. It's another Friday, and this time it's a much better Friday. Let's call it Risk On Friday. It's Risk On Friday today. Everything Risk On is rallying. Bitcoin is rallying, Ethereum is rallying, the NASDAQ is rallying. It's basically risk on this week. It was the biggest week of the year, I think, in terms of earnings, and we had the FOMC meeting and we had GDP numbers. And even though we're in a recession, this is the best recession I've ever been a part of. I must say, this is the most fun I've had in a recession, that's for sure. Is this a real recession? I don't know. We'll find out today. We'll speak to our guest today about whether it's a recession. Just before we get started, I'm going to do what I need to do today. I need you guys to do what you need to do. You know what you need to do. If you're not a subscriber, if you're part of the 40% that watch the show as non-subscribers, then what are you doing with your life? Smash up that subscribe button. Give this channel some love. Smash up the like button. Get this content out there. Help us make this the biggest show in the world. We do know that you guys are the most loyal community in the world, so we need you to help us get this show out there. Also, let's remember that our Friday Banters are actually sponsored. And they're sponsored by the best sponsor in crypto. That is, of course, NordVPN. Remember, if you're not using a VPN and you're trading in crypto, then you're a maniac. You're a lunatic. Only lunatics and maniacs trade without using a VPN because you're exposing your IP address. So not only does the exchange know exactly where you're at, hackers know exactly where you're at. It's just dumb. It's like, why wouldn't you spend $3 a month and get yourself a VPN? And if you're going to use a VPN, get NordVPN, because not only can you protect yourself for less than $3 a month, but you get the faster speeds. You also get the password protector and stuff like that. So really, you got to do it. You got to do it. So get NordVPN now. Hit that. You get a deal. The deal is $3.16. I mean, which maniac would trade crypto and not pay the $3.16 a month to do it? All right. So that's some love to our sponsors. We'll give them some more love later. We love our sponsors. Thank you, NordVPN, for bringing this to us. And let's get the guests on, because I've got so much to talk to them about. The first thing I need to know is, are we actually in a recession? Because I'm so confused as to whether or not we're in a recession. Everywhere I look, I'm getting a different definition of a recession. And today is even worse. So, we've had this whole thing about whether or not we're in a recession. So now the plot thickens. And that is that now we've got Wikipedia changing the definition of a recession to favor the Biden regime. And then not only did they change the definition of a recession, so it's now in economics, a recession is a business contraction when there is a general decline in economic activity. Recessions generally occur when there is a widespread drop in spending. This may be triggered by various events such as a financial crisis. They changed the definition, and to make it worse, what did they do? They locked the page. So you can now not change the definition here. So now I'm really confused. I'll tell you why I'm really confused. So Bill Clinton said it clearly. He said it clearly in 2000.
Mr. President, what do you think about a recession?
Well, a recession is 2 quarters in a row of negative growth. I don't think we're going to have that. But we couldn't keep up 5% growth a year.
So Emmy said it's 2 quarters of negative GDP growth. You know what? I'm super confused about what's going on here. Let me bring on people. I think the best people to bring on are people that have actually worked in the White House. So, you know, because they know how the White House thinks, right? So, I mean, I know we heard the spokesperson for the White House this week.
If things are going so great, though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Deese said in 2008, of course, economists have a technical definition, which is of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
Yesterday he said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is
What
not.
changed?
It is not.
Why did he say that?
It is not. I can
What's the difference
speak
other
to
than the president?
what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors. Economic factors and indicators to consider, and I will say that the textbook definition of recession is not 2 negative quarters of GDP.
I'm so confused. Mooch, I know you've worked in the White House. Are they trying to spin us a story here about what a recession is? Are they trying to change the definition? I'm so confused.
Yeah, well, yeah, it's hard to believe it was 5 years ago. I got my ass fired on July 31st, 2017. So it's hard to believe it was that long ago. But yes, they're obviously trying to change the definition. But what she was trying to do is lock it in on Wikipedia and then go to the definition on Wikipedia and then just simply say, we didn't change. Here's the definition pursuant to Wikipedia, which we changed and then locked. That's more or less what she was trying to say, but she got caught in the lie, and that's, you can see all of her body language reacting to the lie. So, I mean, listen, it is what it is, but we are in a recession. I do think it's going to be a shallow recession. I would love to hear Mark's comments on that, because I just think there's just so much savings pent up, and there's so much pent up potential consumption as a result of the pandemic that it'll likely be a shallow recession. But I'd love to hear Mark's reaction to that.
No, 100%, Mooch. And look, recession, this is all debate about, did they change the definition? No, they didn't. The definition has actually never been 2 consecutive quarters of negative growth. That's never been the definition, because the definition doesn't matter. A recession is determined by NBER, the National Bureau of Economic Research. And they have 4 factors that they look at. Now, it turns out that 100% of the time, up until 2001, interestingly, the quarter after Clinton made that comment, and he made that comment for a reason, which I'll explain. Up until that time, there was a perfect correlation, 100% correlation between the 4 factors of industrial production, economic growth, employment growth, retail spending, and I always forget the 4th one. Those 4 factors and 2 consecutive quarters. So that became the nominal definition. But the actual definition is not that. The definition is NBER looks at these 4 things. And now, they always do it ex post. They do it 8 to 9 months after the fact, which is not very useful. So you're in the recession. It's not called a recession because the NBER calls it later. So the next quarter after what Clinton said, we had negative GDP, first quarter 2001. Why? Because the tech wreck had happened and the companies were starting to restate earnings and all the things you're seeing now with the inventory rising and GDP falling. But then the second quarter was positive. So Bill Clinton's like, we're not in a recession because we didn't have 2 negative quarters. Well, no, we were in recession. And then the third quarter was negative, exacerbated by 9/11. The whole year, we actually grew 1%, to Mooch's point, a shallow recession. It wasn't the end of the world like global financial crisis, but it was a recession. And so we're in the same thing. We are in 2001 redo. We had the tech bubble 2.0. We had the tech wreck, the crash. Now we're seeing all the bad accounting bubble to the surface. We're seeing all the inventory problems. We're seeing all the fraud, Enron, WorldCom kind of redo. So it's exactly the same thing. But again, it's not the end of the world. Recessions are good. Recessions are like winter. Crypto winter ended 2 weeks ago, right? I got my Bitcoin bull socks, from Mount Socks. Okay. It's too hot to wear socks today, so I got them in my hand. Okay. Winter's over. Spring has sprung, but winter is good. Winter is necessary. Recessions are good. Recessions are necessary. We went 14 years without a recession because the Fed is idiotic, right? They overstimulated, overproduced money to allow bad companies that make big political contributions to thrive and survive. 40% of the companies in the S&P 1500 can't cover their interest expense. Forget paying back their debt. They're like the government. They could never pay back their debt. They can't even make their interest payments. They should be out of business, flushed, bankrupt. But the Fed kept feeding them cocaine and allowed them to thrive. And so we got a zombie party. We got the highest number of zombie companies in the history of the markets. They need to go away. Recessions are good. They cleanse.
So what was it about this week that spurred on this risk on thing? Is it finally that the market thinks that the Fed is caught up to the curve? Is that what it is? Is it that Powell suggested that they may not be that aggressive? What is it what's giving investors this confidence? We haven't seen this confidence in a long time. In fact, I think that Macro Elf said something like, this is the biggest pump that we've had after a Fed increase ever, or something like that, or since 1970. What is it that's doing that?
Well, let's separate equity markets and crypto markets, because they're rallying for totally different reasons. So equity markets, it's just short covering, right? It's low volume, summer doldrums, no one's working, everybody's on vacation. Low volume short covering, right? There has never been, not ever, a 4% up day in a bull market. Not once. A bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. That is a bull market. A bear market, on the other hand, is a market that goes down most days, but goes up sharply on good news or perceived good news. So what was the perceived good news the other day that caused the 4% day? Microsoft missed earnings, missed revenues, but said, but by the end of the year, we're going to be back at 12% growth. On what freaking planet? You've had single-digit growth for 3 quarters. Your profits have been declining for 5 quarters. Somehow you're going to rebound to 12% growth by the end of the year. And investors are stupid. They bought that shit like hook, line, and sinker, because hopium is a drug, and hopium is what causes these short covering rallies. So the equity market is in the 93rd percentile of expensiveness in history. It's only been more expensive 7% of the time in 140 years. Okay. So it's not cheap. It ain't cheap. Crypto, Bitcoin in particular, has only been this cheap. Now, this was a few days ago, but it was in the 3rd percentile of cheapness in all of its history. Now, could it go to the 2nd percentile?
On what metric? On what metric?
On its long-term trend growth. See, if you look at the long-term trend of any asset, right? The long-term trend of stocks is up at about 6% over the long term in real terms. Why? Because inflation, companies grow, they produce profits, they pay dividends, so stocks go up. But things don't grow linearly. They go like this because of human beings, greed and fear. If you, again, look at Bitcoin, the Bitcoin network grows exponentially, according to Metcalfe's law, very stably, right? The fair value of Bitcoin is easy to determine. It's around 32, 33K today. That's easy to determine. It was 10,000 in 2017, but the price got to 20,000 because people are stupid. And then the futures market gets introduced and people can short. And that's why we went from 70 down to 17.5 is they let the futures ETF happen. right? Not the spot, but the future. And so all the big banks can short the shit out of it and cause the price to go down. Why? So they can buy more. Anyway.
Okay, so you're saying equities are rallying because it's a little bit of a short squeeze, but crypto is rallying for a different reason. Mooch, do you agree with that?
I do agree with it, but I'll answer the first part of your question, though. Why are people in a risk-off situation right now? And I think it has to do with sentiment. And when I look at sentiment, there were respondents to a Bitcoin survey. Are we going to 30,000 or 10,000? 85% of the respondents said we're going to 10,000. So Mark and I know 30 plus years in the business, that's a bullish sign. That means everybody's out or everybody's in cash or everybody's super negative. If you looked at the sentiment on the stock side, this is the first time in 25 years where they surveyed institutional investors, and the institutional investors said, I'm in bonds, I hate the stock market. And every time that happens, I'm in bonds, I hate the stock market, guess what happens? You get a rally. So the combination of those two things, I think, has led to this.
All right, so let's talk about, this market is very correlated to the NASDAQ. So we've been watching.
No, Ryan, it's not. Okay, and I don't mean to interrupt you, but you always have the best
I'm
on
on Zoom, but can I confirm this?
So
yeah, we can. Just wanted to confirm.
What is that?
No, we got the new. So here's the problem: short-term correlations are meaningless statistics. They're completely meaningless, right? And so yes, since November to June 14th, June 14th was the bottom in crypto. So why? So from November to June 14th. There was a massive liquidation of risk assets. Okay, we had the highest leverage, the highest margin debt in the equity market, and we had the highest leverage in the crypto markets, right? 3AC was a perfect example, right? 3 billion of equity, 18 billion of assets. Stupid leverage. And you had people 50, 100 times levered on BitMEX and Binance. Insane, absolute insanity. So what happens in a liquidation? You're forced to sell what you can sell, not what you want to sell. And when you do that, when you sell assets, they go down. And so everything goes down and correlations go to 1. And if it says, oh, they're highly correlated. No, they're not. Okay. So look at the last month. Bitcoin prices up, making higher lows, higher highs. Okay. Ethereum prices up. Stocks volatile and then hooked up, not correlated. Over the long term, right? 14 years. That's a good time period to figure out correlation. Bitcoin is 0.0 correlated to bonds, 0.15 correlated to stocks. It's a beautiful diversifier, best diversifier I've seen in 35 years of doing this. And here's the really interesting point on this, which is stocks are rallying for a very different reason because this short covering. Most of the leverage is still in the stock market. We have the second highest amount of leverage in history still, and that has to go out. All the sellers in crypto sold. As of June 14th, everybody sold. 3 Arrows, BlockFi, Celsius, Tesla,
Luna,
Elon Musk. Everybody sold. So there were no more sellers. And what you needed to see. So 2 weeks ago, I do this weekly show on Friday mornings called On the Margin. And 2 weeks ago, I said, I'm pretty sure that winter's ended, but I'm not 100% sure. We need one more higher low. We need a third higher low. But once that happened, absolute certain that winter's over, spring is here. Now, spring can be volatile. Doesn't mean we're going straight up, but winter's over and we're in an accumulation pattern, not a distribution pattern, not a liquidation pattern.
So I tend to agree with you, but I don't really see a world where the NASDAQ collapses and crypto flourishes. It feels, and maybe I'm caught in
fourth quarter 2018. That's exactly what happened.
Fourth quarter 2018. Okay, maybe, but very long time ago, very different type of investor. To me, it feels like the type of investor that we have now is a much more institutional investor. It is the Teslas, it is the Sky Bridges, it's a very different type of investor that we had in 2018. And for me, for as long as Bitcoin is being driven by this kind of investor, we're going to follow a risk on, risk off mentality, which is what we're seeing now. Either you risk on or you risk off, and they were risk off until the beginning of this week. And then
again, I don't mean to be a dick, but totally disagree. The risk on, risk off is only correlated to leverage. Once the leverage, I mean, I am a dick, but and I actually have a no dickhead rule, right? I don't work with bad people, but I don't care how smart you are. But here's the thing. You can't judge liquidation periods like normal markets. When leverage is being reduced, when liquidity is being sucked out of the market, correlations go to 1. But that does not make Bitcoin a risk asset. Bitcoin is not a risk asset. It is the antithesis of a risk asset. It is a diversifying asset. It is a store of value. It is digital gold, right? It is money. There's only been one money for 5,000 years. One, gold. Gold is the only money. Money is an asset that exists in the absence of a liability. There's been nothing else that is money other than gold. Currency is not money, right? It is debt. JP Morgan said it best. Gold is money. Everything else is just credit. So now we have a digital form of gold, Bitcoin, and it will be money for the next 5,000 years or 10,000 years or however long. But that is not a risk asset. That is actually the antithesis of risk asset. Risk assets are assets that fluctuate based on GDP growth, interest rates, policy. Bitcoin is none of that. So
what do you think?
I totally disagree.
Mitch, what do you think? Do you see a world where the NASDAQ comes down and Bitcoin runs? I mean, do you see this world happening in the next 12 months?
Next 12 months, no. But do I see that over the course of, say, 5 years? I do. I do see Bitcoin decoupling from these assets. I completely understand why it's a risk asset now in my mind, or at least let me give you my impression as to why. And I would say that I've been humbled by life and markets, so I could be wrong. But I think what's happening right now is Bitcoin took fire and interest from institutional investors. And Bitcoin rallied in 2021 and a lot of incremental buyers were new buyers and somewhat institutionally oriented. And so they don't fully understand what Mark just said about money. They don't fully understand what the implication is of this technologically pure distributed ledger, fully transparent. They don't understand it. So they're treating it like a risk asset. And so they rallied it up. And then when the world cracked and the Fed started raising interest rates, they smashed it down. And I think there's good news in that, because what Mark is pointing out, I totally agree with. It flushed out all the charlatans. It flushed out all the leverage. I mean, it was like if Bernie Madoff had a baby with John Merriweather from Long-Term Capital Management, they would name the baby Three Arrows. You follow what I'm saying? Because they had over leverage and fraud at the same time. And so this flushed that out, which I think is by and large a good thing.
Okay,
that breaks the internet.
It's a gross visual.
That wins the internet.
I must say
that is.
You know that's becoming a meme. We now see Dan's headshot, but we don't actually see Dan. Mooch, I want to ask you, I mean, being on the institutional side, but being more on the diamond hand side of institutional side, you've been taking a lot of flack from the media, the mainstream media, about holding onto your Bitcoin. We spoke about this earlier on today, where they portrayed you as and Scaramucci doubles down as he believes his client's eye exits. And I mean, they did this. How do you deal with that? What's your view? How are you playing this?
Well, listen, I'm totally fine with it. I don't take myself that seriously. So when I see myself sinking on the SS Mooch, I'm wondering if that's a bottom. It's reminiscent, and frankly, of what happened to Jeff Bezos. They put his head in a bomb, like one of those old Stratego bombs from the board game, on the cover of Barron's, and they said that Amazon.bomb, the age of this internet retailer is over, and that was in the March 2000 crash. And of course, that was the bottom. Now, I'm not saying it's the bottom. I'm hoping that it is the bottom.
It is the bottom. It is the bottom.
I hope that brings me good luck. I framed it, put it in my office.
No, it's the bottom, and the comparison to Amazon.bomb is so apt. Look, human beings do two things really, really well. They buy what they wish they would have bought, and they sell what they're about to need. And they are spectacular at it. That's why the average investor sucks. And that's a technical term. The average investor sucks. Look, the data is startling. 20 years, if all you did is pick stocks and bought them, just bought mutual fund stocks, you made 9%. 20 years, 9%. Didn't do anything, just bought stocks, held them. If you bought bonds over that period, you made 5.5%. Okay. What did the average investor make over the last 20 years? 2.9%. How? All you had to do is pick one or pick 50-50. Do anything other than what you did. Because what do people do? They buy what they wish they would have bought. After an asset rockets up, they buy it. Here's a crazy stat. After the global financial crisis, after stocks got crushed from 2009 to 2020, 11 years, investors were net sellers of FANG stocks. Net sellers of FANG stocks that were down 70, 80, 90%. And then starting in 2021, after they rallied 10x, they became net buyers and set all-time records for buys at the exact peak. So Amazon.bomb was exactly at Amazon at $6, down 94%. Okay. Went on to do pretty well after that. And the SS Mooch is the bottom. I bet that was close to June 14th. I mean, that
it was last week, but
it was last week.
Okay. I think Bitcoin was at 19,000. Of course, I went on CNBC to explain my position right after the sinking boat. But I will say this: I wish I had as many Bitcoins as was on the boat. It's graphically depicted, but of course I don't.
I see you got Dan with us. Dan, can you hear us? Welcome, buddy.
I'm sorry, everybody. Yeah, I'm terribly sorry. Can you hear me?
Yeah,
we can hear you. It's lagging slightly, but I think if you speak
between having the time off and not being able to figure out the audio, like an OG as you call it, OMG, Mark.
OMGs, the old macro guys. We suck at technology, but we're good at macro.
Yeah, no, I'm terribly
you came into.
What I was hearing, what I was hearing from Mark, I think, is pretty much right on. If you want me to say something about that, I think that the feeling, often these, lows, it's very hard to call an exact low, but they feel sort of similarly. If you go back, I don't know, throughout your career, there are moments of extreme panic when you get the most number of phone calls from the most panicked investors. It all seems to be right around the low. And I can confirm from my independent data set that that happened right around those lows. And in fact, when I get that kind of feeling, I actually put it on Twitter. And so in the last few weeks or so, I've been, suggesting that, we were pretty much close to it. But again, no one calls the bottom. But the feelings of panic and the oversoldness, and then of course the classic one, both you guys will confirm, is you always have a very big bankruptcy at the bottom. And if you go look at the bond market peaks of the last 25 years, starting with Continental Illinois, all the way down, you've got massive bankruptcies. And so we had that as well. So I'm not saying we can't consolidate or go back and touch the low again or whatever it is. But, I think that the maximum panic was reached. Was that
100%? And
was that close?
No, and to Dan's point, investing, the reason investors have such bad track records is investing is a really simple thing, but it's hard to execute, because if you make an investment and you feel good about it, you're going to lose
wrong.
Money. And if you feel really good about it, like if you feel really, really good, you're going to lose a lot of money. Like get wrecked. If you make an investment and you feel a little sick to your stomach, you do all right. But if you feel really sick to your stomach, like when it was wicking at 17.5 on June 14th, Father's Day weekend, my Father's Day weekend sucked. Again, technical term, BlockFi's collapsing, all this stuff is happening. The world is ending in people's minds. Three Arrows is liquidating. Celsius is shutting their doors. The world is ending. I felt really sick hitting the buy button.
But you hit the buy button. And I mean, Mooch, I want to talk to you because the reason why I want to direct this at you is because I know I call you the institutional money. You're the epitome of, you're the early adopter of institutional money. And why I'm asking this is because you took a lot of flack for being in Bitcoin, and there were you limited redemptions in your funds because people wanted to rush out of the door. Can you deploy more capital into crypto when this is happening around you from a macro point of view? Is it too risky to deploy more capital now from a sentiment point of view, or can you buy the dip as an institutional fund like that?
I actually think this is a great time to buy, but let me just address that. So unfortunately for me, I'm hooked into these wirehouses. And so Mark will remember this because he's had the same problem with these wirehouses. They're very fickle, very ephemeral, very transactional. But I bought the business from Morgan Stanley. And so let me just explain that. I bought a piece of Citibank's fund of funds business. At the same time, they were selling Smith Barney's brokerage to Morgan Stanley. So 100% of my assets were Morgan Stanley brokers, converted over from Smith Barney. So they're very transactional. They put a sell on the fund. They downgraded the fund. We went down 25% in the pandemic. They downgraded the fund to a hold. We went up 61%. They upgraded the fund to a buy. Okay. And then we slipped a little bit and now we're a sell. And so what they're doing is they're forcing all the FAs to scramble. Many of these FAs don't want to sell and they don't want their clients to sell, but this is sort of this bureaucracy that's going on. I only limited redemptions or suspended redemptions on the offshore fund. Why? Well, Mark can tell you, if you've got 20% in privates, which was stated in the prospectus, and Morgan Stanley now is putting a sell on, let's say 25, 30% of the people want to leave, I can't allow the privates to get too large, and then I hurt all the people that want to stay. It's all right there in the document. It says this fund is limited. It has limited liquidity, particularly in uncertain markets. So I did all of that. And of course, Morgan Stanley leaked that information to the press, and then they came down on me super hard. But I guess people did not expect me to respond to the press and to come on and talk to you or go on CNBC or to explain to people what is going on. So it's not related to Bitcoin. We have 15 to 20% of that fund is in Bitcoin. That is liquid. It's related to the private stuff, which everybody knew about. And as a fiduciary, and my board independently voted unanimously to suspend until I could create more liquidity in the fund. And it's unfortunate. Believe me, people don't want to be invested with us. I'd like to get them out as soon as possible. So that's the answer.
With that kind of sentiment, because you're playing sentiment here, that's the problem. With that kind of sentiment, can you buy the dip? Can you then, when sentiment is
even now we're taking in inflows, man. Kathy Wood took $2 billion in during this debacle. We're taking in inflows and we're buying we like our portfolio. We're buying our portfolio.
Yeah, but Ran, your point is well made, right? Which is there is an inverse relationship between how easy it is to raise capital and how good a time it is to deploy capital. And right now, it's nearly impossible to raise capital, right? I'm in the capital raising business. And, we went out and we talked to a whole bunch of institutions. And 6 months ago in November, they're like begging to come in the fund. And price collapses. And like, no, this is the time. It's like what Mooch said. When the price went down 25%, that's not when you cut it to a hold. That's when you market a buy. And when it goes up 61%, that's when you actually make it a trim, not a sell, not an outright sell, but a trim. Okay. Then when it goes down again, you upgrade it to a buy. But that's not the way the world works. Look at stocks. Look at the ratings of stocks. There are no sell ratings ever, right?
Yep.
Until like Peloton went down 98%, 96%. Then they cut it to a sell. Like, are you freaking kidding me? Now, maybe it becomes a private equity buy and could treble, but you don't sell it I mean, if you're dumb enough to hold it down 98%, don't sell it now. So it's just an option.
Yeah. All right, Dan, you missed the first part. I mean, I'm very keen to get you to catch up with you as to where we're at. As we said, we had a pivotal week this week. We think that Powell became a lot more dovish. We're also in recession. I mean, believe it or not, I don't feel a recession, but people are telling us that we're in a recession. Do you think now that we're risk on, and if we are risk on, I mean, have we seen the worst of the Fed's interest rate increases? How does this playbook play out?
Yeah, I mean, I don't think it's necessarily that straightforward. I mean, the last few months I've been talking about the Fed over jawboning that short rates by the end of March were not going to get to 4% or 3.5%, whatever the max. It was about 2-3 months ago that the market had priced in, and so I think that was definitely the high in rates for a while, and I think now we could probably see the 10-year down below 2% next year. Some people think it's, sooner. It's going to be a massively inverted yield curve. I can't say it's tomorrow. I mean, look, this is a nice chart pattern. Looks like it's really broken. But, the forward-looking data is all extremely weak. And it's not just a little weak. It's most of it is weaker than it was in 2008. And so you look at things like, I don't know. I love that Raoul Powell forward-looking indicator that he has. It has a 9-month lead. If you even look at, something like Philly Fed expectations index, and there are a lot of 6-month leading indicators that are below where they were in 2008. So there's almost no chance that we don't have some sort of slowdown. And I really mean almost no chance. And I expect a pretty, sharp drop in growth and inflation. The stock market, will be supported a little bit by the liquidity that comes back in with interest rates dropping. But I don't know that we're just going to run away on the stocks. I think we probably still can consolidate for a little bit. I still think there's this period here, the next 3 months, where we do have risk. Before this liquidity can kick into the market, and meaning we're going to see worse economic data before the liquidity comes in to support the market. So I just think there's a hole here of a few months where you have some risk. But look, without risk, there's no opportunity. So you have to make a judgment about whether you're willing to sit through, another correction or consolidation. But I think, look, we had the worst first half in a bunch of different financial assets that we've probably ever had. If you combine the return of bonds and stocks together, I think it was the worst in over 50 years. Bitcoin had its worst Q2 ever. It was down 56%. So I don't see any of that being replicated, but it's not going to in the second half. But it's not going to be that easy. So it just depends what your holding period is. Before, you were talking about, lockups and different fund structures. And one thing, I just want to say for us at 10T, the one thing that I'm sort of happy about is that when I launched it, I wanted to solve for volatility. And I wanted all those returns in Bitcoin and the underlying digital asset ecosystem without ever having to worry about liquidating after a 70% decline. So we have a 10-year structure, 10-year lockup, and we make investments, and that's it. And, we've got a big bunch of cash, and we're looking to deploy into discounted companies. And it's just that I've lived through that enormous volatility before. And I think capturing the upside here is it's not that over a long period of time is not that simple. And the key is to just not ever get shaken out. Right. So
is it time to be deploying now? Would you be?
Of course, we're buying. We're buying 2 or 3 different companies right now that'll probably make it into the press in the next month.
This is the best time, second best time in crypto to buy. Best time was in the 2008 debacle in the end of 2018, not 2008, 2018, sorry. when we went from 6 to 3,200, and kind of that first quarter of 2019, unbelievable opportunity.
But you know what? I mean, a lot of the companies, the valuations haven't come back down yet, and many of the founders are not really being as reasonable, I think, as they should be. And so, you just have to wait and for us, it's finding the businesses that are cash flowing. We have 4 or 5 companies in our portfolio that are actually making more money this year than last year, and so that helps, with some of the ones that aren't.
Yep.
But look, there are a lot of subsectors underneath this digital asset ecosystem that are doing quite well. And I don't know if you've talked about some of the metaverse NFT driven businesses. You have things like Art Blocks that are doing fantastically. Animoca, I know the revenue has been astronomical, really, versus our expectations. You have companies like Yuga Labs all of a sudden come out yesterday and say they're going to add a 5% commission onto their MeBits trading, and MeBits explode up. Why? I mean, normally you wouldn't think that would happen, but it's because Yuga's come out and said they have all sorts of plans, community building plans to incorporate MeBits. Now, look, traditional financial guys probably think this whole world is nonsense, but I don't think they've done their work. And like to think that we've had this massive drawdown in some of these cryptocurrencies, 80% more, Bitcoin, Ethereum, and you have a thriving world underneath the hood there. Also the DeFi world has survived some of the mess of the CeFi world. That's been quite impressive.
I mean, survived. I think it's more flourished than survived. If you look at the I want to just
still down quite a lot, but I mean, I think it's a very robust ecosystem, and there are times when something is always flourishing, and so Ledger, for instance, did their first NFT drop. It sold out almost immediately. They made $5 million in the space of one day. I mean, that's a company that's going to do 200 million plus in revenue. They did 5 million on one day. They're innovating. They're doing new things. We're thrilled with Ledger. I think it's massively undervalued. They're potentially going to do more revenue this year than last year. I mean, just think about that. What happens to that company when the bull phase comes back? So I sort of have a different perspective about this. I'm super bullish long-term on Bitcoin and Ethereum. Some of the other ones I'm not so sure about. It's just not.
Yeah, but look, I mean, to that point, Dan, look at Uni, right? Uni,
Mark, let me give
increased fees and the price explodes up 25% in a day. It was massively under. That's a company or protocol, not a company, a protocol that.
Which I didn't hear you. I didn't.
Oh, so Uniswap. So
Uniswap, yeah.
I want to spend some time on Uniswap, Ethereum, and everything else. So just let me give some love to our sponsors. We come back. I want to speak to you guys mainly about Ethereum. We've spoken about Bitcoin. We've spoken about macro. We've spoken about stocks. But I think it's time to talk about Ethereum. We're 45 days away from the merge, and I think we need to speak about Ethereum. So let's just give some love to our sponsors.
Friday Banter is brought to you by NordVPN. NordVPN is a security product that every crypto trader must have as part of their essential tools. For crypto traders, NordVPN encrypts your personal data, hides your IP address, and enables you to access crypto trading platforms from any geographical location, giving you the freedom to buy and sell crypto completely anonymously. It also protects you from hackers and phishing attacks. NordVPN is super easy to use, offers security for up to 6 devices, and with servers in over 60 countries, is the fastest VPN out there. The promotional link below gives you up to 61% discount and a 30-day money-back guarantee on your purchase.
All right, you guys are saying I must fix my mic. Here I am. I fixed the mic. We're back. We're back with our Friday Banter. We've been speaking about Bitcoin, but I think it's now time to change the conversation and talk about Ethereum. And I think the reason why we need to talk about Ethereum is because of this. We finally have a date for the merge. 45 days away is the Ethereum merge. The Ethereum ecosystem is absolutely exploding. I mean, if you guys have been watching the Ethereum ecosystem, Mark, you mentioned Uniswap, but the Ethereum ecosystem is absolutely exploding. And the question is whether we should be buying Ethereum now. And I guess the real question why I say maybe Ethereum over Bitcoin is
Not only because of the merge, not only because Ethereum becomes ESG friendly, because Ethereum starts to give a very high staking reward, somewhere between 5 and 15%, depending on the amount staked, etc. At the same time, you have an overhang of Bitcoin, Mt. Gox, 135,000 Bitcoin, which are coming into the market between August and December this year. That's the indications that we've got. What is the sentiment out there, the institutional sentiment around Ethereum? Are you guys looking at Ethereum on top of Bitcoin?
Mark, you want to?
Yeah, look, so yes. And here's the interesting thing. I surf spaces at night. And I'll go to a Bitcoin maxi space, and they're like, "You're not welcome here. You're a shitcoiner." I'm like, "What are you talking about? I earn more Bitcoin than you do." And they're like, "No, you own Ethereum. You own Solana." I'm like, "Yeah, I do. I made a lot of money, and I'm really happy about that." So, okay, I'm a shitcoiner. And then I'll go to a Solana space, like, "You're a Bitcoin maxi. Get out of here." I'm like, "I own more Solana than you do. What the hell?" And this tribalism is just stupid. And look, I don't have an answer for the $64 trillion question. And it is a $64 trillion question. The internet is made up of 5 protocols. Okay? The internet, we're using it right now, TCP/IP, that's how we're communicating, okay, is the base layer. Then FTP sits on top of that to move files. Then HTTP for websites, SMTP for email, and www that ties it all together. Okay? We know that. In the future, will we have a multi-protocol world, a stack? Bitcoin is the base layer, Filecoin to replace FTP, Ethereum like www, a toolkit, and then Cosmos, Polkadot, Avalanche, Solana, something for the other 2. I don't know, maybe it's 7, maybe it's 5. Or are we going to go to a Bitcoin-only world, right? Bitcoin is the base layer, Lightning on top of that, layer 3s, layer 4s. I don't know, but I'm going to bet on both for now. And so I am going to support Ethereum-based projects. I'm going to own Ethereum. I'm going to own Solana. I'm going to own Avalanche. Because if you can tell me for certain that we're going to have a Bitcoin-only single chain world, God love you. But I'm not sure of that yet.
But I mean, to me, it just makes sense right now to be putting more money into Ethereum. Again, I say there's an overhang cloud of Mt. Gox sitting over Bitcoin. There is a rocket underneath Ethereum called the proof of stake merge. You can see it. I mean, I want to just show you some numbers. Let me just show you some numbers here. Give you some perspective of what's been happening on Ethereum in the ecosystem. So you've got Ethereum up 96% from its lows. You've got Ethereum Classic because the miners are saying, look, let's try to protect the proof of work chain, up 240%. Off its low. You got Uniswap up 165% off its low. You got Lido Finance almost 5x off its low. It just feels like the money is in Ethereum. And it just feels like we're getting into this buy the rumor, sell the merge type thing. And there's 45 days until the merge. That's quite a long time, right?
But Ran, you just said it. Buy the rumor, sell the news is a real risk. So, 100% move in ETH is real and probably logical. It was probably oversold, and now, but the risk of merge happens, and people look around and say, okay, really nothing changed per se. We still got to work. We still got to build. We still got to solve gas fees. So I don't know. I know there are people who are in the camp that were 10,000 by the end of the year. I'm not in that camp, but I know people I respect and admire and have invested with, and I actually hope they're right, but I'm not there yet. I don't know if you guys feel differently.
Mitch, what do you think? I know you're Bitcoin, ETH, Algorand. What's your view?
I also own Solana. I own Helium. But I own most of my assets are in Bitcoin. There's one fund that has more Ethereum than Bitcoin because of the merge, and our head of cryptocurrency analyst, Brett Messing and John Sfulos, overweighted it in that one specific fund, which is working, frankly, for this month. But I think I'm in Dan's camp, actually, and I'd like to hear Dan's reaction to this, because Dan said something that I think people really need to listen to. Dan said that traditional finance people have not done the work. And so I'd like to hear Dan's comment on that. I'd like to know why they haven't done the work, because when I look at the technology and I look at what's going on, I'm like, okay, it's impossible for this stuff not to be a big part of our future.
Mhm.
So am I missing it? Maybe I'm wrong, and I've been humbled by life, as I said, so maybe I'm wrong. Or what is it about these people that are not willing to do the work, or why are they missing this? Dan, what are your thoughts there?
So Ran, he's taken the conversation to a little different place.
Love it. Carry on.
So, I mean, look, if you tried to make your way through Antonopoulos' book on Ethereum, you know, it's super opaque, very difficult to understand. And most of the great investors really, or anyone who's been successful, really knows their product or their area down to the brass tacks. And I think to know, let's just say Ethereum as an example, down to the brass tacks, even to understand how the Bitcoin network actually works. And I like this book by Jan, Pritzker called Inventing Bitcoin. But, you know, it's very difficult and very abstract. And you need to have a skill set that people our age and older don't have, which is a combination of being able to be a programmer and understanding cryptography and engineering and math. And it's very difficult. And if you've been successful in your day job for 25, 30 years, you don't really have the time to put to it. Now, I don't know how long your rabbit hole experience was. Mine was 6 months, about 10 hours a day. I didn't do anything for that whole period. And that was just to understand why Bitcoin was so important. And there, you know, I feel often I still have holes in my understanding of how sometimes the consensus mechanism works. It's not always that clear. And, you know, it is clear to people out there, but not always to me in 100% way. And so you have people like, today's a perfect example. I read Mike Vranos at Ellington is saying that, you know, mortgage-backed securities now are the biggest opportunity since he's seen since 1994. Of course, he's the sort of the most well-known successful mortgage-backed security trader. Now, he understands mortgage-backed securities in an extremely deep way. Okay, and they are confusing. Understanding how CMOs are spliced, it's not straightforward at all. Mm-hmm. But there you have a guy from the old world who really understands that. So for someone like that, Mike could probably understand what's going on in this world, math background, very technical, but there's no incentive in a way. He's got a $20 billion fund, you know, and a lot of, you know, so I think it's that the hurdle to knowing it in a deep way is very high. And, you know, I think that's, in my experience, that's what's kept people out. And the way I've gotten around that is basically to say to my investors, and I have quite a few institutional investors, listen, let's not worry about understanding cryptocurrency. We're going to own these businesses in the space. Yeah, 10T is not going to be the best performing fund in the space. You're going to have companies, you know, funds like Multicoin that go up 30x in 1 year. We're not going to do that. You know, we're shooting to make 5 to 10x over a 5 to 10 year period. And yes, some of our companies might have tokens in cryptocurrency on their balance sheet, but it's my belief that the companies that are deep in the weeds, that are building this ecosystem, they're going to be able to pivot in a smarter, better, faster way than I could ever about which chains are taking off at what time. Yeah. And so I kind of outsource myself, and I've got 7 analysts, 15 people. We outsource that judgment to the guys who are smarter than us, you know, and, you know, Jem and I would be a perfect example. Mark and I did that deal 3 years ago. Those two guys, they bought Nifty Gateway for $1 million. And, you know, who knew that NFTs were going to take off like this? And last year they did 70 million in revenue from that platform. So 3 years ago, I was never going to be able to see, you know, that. And so in my view, you know, by investing in some, you know, the more, I'd say, developed companies, you know, that have a certain amount of revenue, they have the ability, because they're already profitable, to pivot to the future better. And so you know,
well, there's three points that,
yeah,
3 points that Dan's making that I think are really, really important. and it goes to Mooch's question. So one is, if a person's livelihood depends on them not understanding something, they will not understand it.
Not going to do it.
Okay. So traditional financial, look, what this is, what blockchain technology is, it's a technological evolution that will do to finance and financial services what the internet did to media and commerce. Completely disrupt it and transfer market cap from old guard companies to new age companies. That disruption is going to happen. And that's why we're in the then they fight you phase. 2009 to 15, first they ignore you. Famous quote from Gandhi that Gandhi didn't say, but okay, first they ignore you. Okay. Bunch of nerds and geeks playing with their magic internet money. Who gives a shit? Okay. Then 16 to 21, then they laugh at you. Ha! Look at those stupid nerds and geeks playing with their magic internet money. Stupid. 2022 to 27, then they fight you. The fight stage, brutal. It's gonna be fucking brutal. And I'm talking brutal. And it has just started. The SEC has been a pisser. Just wait. It is brutal because this is an 800-year cabal. The banking cabal, founded by the Medicis and the Rothschilds, has been going on for 800 years. They really like it. They don't want it to go away. And it's going away. We will go from TradFi to CFi to DeFi. It's going to happen. Okay? Full stop. It's going to happen. But the incumbents don't like that. And so if you're in that business, you don't want to do the work. And here's the thing. Everyone I respect, the two guys on this call, I mean, I respect you too, Ran, but us old guys, and there's another dozen of us. No, I don't mean that. The people that came out of the TradFi world, okay, we're skeptical. I mean, I was so freaking skeptical that I'm a lot poorer. I was introduced to Bitcoin the same time as the Winklevoss twins, the same freaking month. But they were in Ibiza and they got it and I didn't. And it took me years. It took me literally 3 years.
Try to ask what they were doing in Ibiza and what they were taking that made them.
That's the point. I should have gone to Ibiza and I'd be a lot richer. But here's the thing. These two guys have done it 4 times. They've seen the future 4 times. They are amazing at that. Okay. They may not be good at other things. They're not really good at playing rock music, I guess. But anyway, I shouldn't say. I love them. I mean, I love them. I really do. I admire them.
The band at Salt. Don't pick on them.
They can see.
I might have canceled the tour given what was going on, but they want to be in a band. So, but they're amazing. But here's the thing. We are on a path to take money, right, which has been at the root of mankind for a long time, and make it deflationary instead of inflationary, to take control from the elite, which have been robbing us blind, okay, since 1607, when the Rothschilds created the first central bank, the Bank of Amsterdam, and then a branch of the Rothschilds went to London and created the Bank of England, okay? Then we, in cahoots with them, created the Federal Reserve in 1913, and we've been stealing money from the masses, giving it to the elite for over 100 years. That is all coming to an end. Not tomorrow, but it's coming to an end. And that disruptive force
scares the shit out of them.
It scares the shit out of them. And it's always young people. Because young people.
Mark, because this is a little bit off the Ethereum question, but, I think the point you're just about to make is that, and I've been thinking about this a lot recently, but it may be that, it really is just about the generations changing, because Ethereum, which is difficult to understand, it just seems that the people under 35, they kind of naturally just get it. And I mean, again, they're spending 8 hours a day roughly online, and they've grown up with this, and the digitization of money just seems natural. I mean, my daughters, don't have bank accounts. They, and they won't let me put money into their bank account because they say it's stupid. They'll never go there. They'll never use it.
I agree. I agree with your daughters.
I'm just saying. So, what I think some of the TradFi guys eventually, I don't know that they co-opt this system, but there potentially could be a world where there's some sort of merger. It's not going to be with the 65-year-old guys today. It'll be 10 years from now, the guys who are 40 at these banks, who are kind of there, I don't think the banks are completely going away. I think a chunk of the banking system could go away. It's certainly possible.
Well, we got the guy, right?
It's
we got the new
possible.
JP Morgan. His name's Sam Bankman-Fried. So he's an example of building. And I agree with you, Dan, the merger.
Yeah.
Right?
Well, I don't know if it's a merger exactly. I just think that they might more.
No, co-opting. I mean, in the sense,
it's interesting that you mentioned Sam Bankman-Fried. It's interesting that you mentioned Sam Bankman-Fried because you have a guy who's lobbying the politicians, who is an I think he's ex-Goldman or he's ex one of the investment banks. He's making all the right moves.
The secret Ran is not. I mean, Sam's great, but the secret, his dad is a super famous law professor at Stanford who went to Yale Law with all the politicos and is super tight. So that's how he understood the 1907 Trust Act, right? He may be really brilliant. He probably is. But his dad, and this is that digital divide that Dan was talking about. The under 35 are going to rule the world. And we've all seen the video of Joe Biden at 35 telling the people, you got to pass the torch. You got to pass the torch. And now he's 80 something and he won't pass the freaking torch.
All right, guys, listen, time is not on our side. I do have one more question for you, Mooch. It's been on my mind the whole week, but I knew you were coming on the show today, so I thought I had to speak to you. I know you're an Algorand man. We had Steve Kokinos leave Algorand. Very interested to hear your views as to, he was the golden child. He was call it Silvio Micali's right hand, or they did it together. I remember they started the Algorand company and the Algorand chain. What are your thoughts on him exiting?
So I was at Algorand yesterday. I had lunch with two of the advisors and Sean Ford, who's replaced Steve. And if you'll remember, Sean was sort of the president and chief operating officer. I can't really talk about Steve's departure because I don't know the personal decision there. But Steve is friendly to Algorand, is going to be part of the ecosystem in perpetuity, and obviously owns a ton of Algorand. Is still very close to Silvio. The plan that Sean is putting in place, which I have to let him put in place. I don't want to speak out of turn from these people. I think will be a brilliant plan. The technology is, I think, brilliant. It is very scalable. It's sturdy. The main net hasn't dropped since they rolled it out. But I think, to be fair and observational, they haven't done the best job of building their community. And they also probably had some people in there that were private equity investors or venture capitalists that dumped the tokens early or flushed out a lot of tokens. So,
they've had a couple of hits. They had the Algorand Foundation, which gave 3 Arrows Capital a whole lot of tokens, which were supposed to be locked up. 3 Arrows Capital dumped those, or apparently dumped those, allegedly dumped those.
Yes.
Allegedly.
I guess my concern, and I'm an Algorand holder, I've been holding Algorand for a long time, but I guess my concern is I want to see more traction. I want to see more of a strong sense of community. So you got this amazing technology, which is taking a lot longer than they originally anticipated to launch and to become Turing complete for smart contracts. And when I read the news about Steve, I thought I was backing a large part of what I was backing there was actually Steve. His history, the type of guy that he is. And when I read it the other day, I felt a little bit uneasy. I was almost like, do I really need to be holding Algorand? What have they done? Have they got a strong enough community, etc.?
So I do think that it's behind the curve. I think there's a lot of supply in the system. There is $3 billion locked up for governance purposes, but there's a lot of supply. But I do think that there are 3 or 4 big projects that are coming that could likely increase the TVL of Algorand. But listen, I think all of us know it hasn't performed well. It's one of the poorer performing layer ones. And, you know, it's reminiscent to me of Apple and Microsoft. You could have better technology and a better user interface, but still not get the market share. And so we'll have to see what happens. But I predict that the plan that is about to be unfolding, I think will give Algorand a good shot to get in the race again. But we'll see. I mean, listen, I'm not selling mine. And so
no, they need a Simon Sinek moment. They need to watch the Simon Sinek video describing how Apple became Apple, and they need to talk about the why. Don't talk about the what. Don't talk about the tech. Talk about the why. And it is a great analogy, Mooch, to the Apple versus Microsoft. Look, Microsoft stole the Apple look and feel. You know, they won the lawsuit because, again, Bill Gates' dad is Bill Gates, and you know, got him the right ruling. But the best technology doesn't always win. It's the technology that gets critical mass first. Nobel Prize winner 4 years ago, Romer. That's what this is all about. And it comes from community. It comes from this. And so, you know, Ran, I know you take a lot of shit for these types of, you know, hype meetings, but look, the community you've built is magical and it's important. And having conversations across all the different elements, from the OMGs, the old macro guys, to the young upstarts that actually understand the technology. I'm not a techie. I'm a financial services guy. I think it's really, really important. And so I applaud you and what you're doing. And I appreciate
much love.
You're with you.
Much love, guys. Guys, thank you. We did run out of time. I know you guys have all got busy days, busy meetings. Love having you on. You're all part of the fam. And as you say, the best fam in the world, the most loyal crypto community in the entire world. That's what we got sitting here. So thank you, guys. Much love. And
guys, great weekend.
All right.
Thank you. And fam to the Banter fam. Thank you, guys. Another Alpha Pack Banter Friday, my favorite show of the week. My favorite show of the week. Everyone's laughing. You're laughing at the bricks. Yeah. Listen, it's been amazing. It's been amazing. Remember, again, thank you to our sponsor, which is NordVPN. If you want a NordVPN, referral link below. Protect your crypto, $3.16 a month. I mean, come on. Do it, guys. Give them love. They give us love every single week, and you'll be protecting your crypto. I'll see you guys again on the weekend. Sheldon and I are going to do a couple of streams on the weekend. Remember, Monday, it is 9:15 EST, so it's the earliest time slot because we want to be first. We want to bring you guys the news cycle first, so we're going to be the first. 9:15 a.m. EST on Monday. I'll see you guys on the weekend. Until then, let's just quickly have one last look at the markets. Bitcoin, 23,910. Yeah, Bitcoin doing good. Let's have a look at ETH 1715. So back the NASDAQ or QQQ. It's coming down slightly, which is good for my short because I'm very short. I'm very short NASDAQ, and I need it to come down. All right, guys, listen, love you madly. It's been an amazing show. Love you guys for being the Banter fam. Seriously, the best community in the world. You know, the amount of people that have been reaching out to me and saying, listen, good markets or bad markets, we're with the Banter fam. Guys, love you guys. Monday morning, we'll give away the tickets for Korea. I've got to get them out of the Google Sheet. So Monday morning, we'll do the giveaways for Korea. And then, I want to show you something just to give you guys an idea of what's coming up now. Let's just see if I can get this. There we go. I just want to quickly, I want to show you this. I want to make sure I don't just expose 800 people's details here when I do it. And then we have to delete the video. But this is what's coming on Monday. So ByBit, we are launching the ByBit Crypto Banter trading competition. It's open to anyone, but if you're part of Crypto Banter and you use our referral link below, then you can win $100,000. We're going to begin giving away $100,000. I can't wait for that. That's going to be amazing. Sign up over the weekend, and then Monday, let's join. Guys, see you guys on Monday. Until then, have fun, trade well, my friends. Be safe. Have a beautiful weekend.